Hello and welcome to today's webinar, which will look at the renewable energy opportunities for businesses looking to reduce carbon emissions across their properties and offset the trend of rising energy prices. My name is Stephen Kennett and I look after the Cities and Built Environment portfolio here at 2 Degrees. I'm delighted to welcome our speaker today, Erin Karsten of Jones Lang LaSalle's Energy and Sustainability Services team. Erin's presentation will last for around 20 minutes, which will leave us with 10 minutes for questions at the end. Before Erin begins, I'd just like to remind everyone that you can submit questions during the presentation. There's a box on the bottom right-hand side of your screen where you can type in your question and press send. You can submit questions at any point throughout the presentation, however, we'll wait until the end before answering as many as you can. Just aside, if you should have any technical issues during the presentation, please use the chat box on the right-hand side to send me a message and I'll get back to you. So, without any further delay, I'd now like to hand over to Erin, who'll get us started on today's presentation. Over to you, Erin.
Thanks. Stephen said, I'm Erin Karsten from Jones Lang. I'm currently heading up business development for the EMEA Renewable Energy Solutions team as part of our global energy and sustainability services business. I've been since 2005 and been in real estate nearly 15 years. Today, again, we're going to talk about what the market around renewables look like, how different clients are approaching that market and getting involved, what the market drivers are and incentives look like. To talk about renewables, we need to talk about energy, I think, in the broad context. And traditionally, coal or gas and other petroleum-based fuels submit a substantial amount of carbon, but also present serious risk to the environment in the extraction of those fuels. And finite opposite of renewable. And when they're gone, they're gone. So renewable energy in the future is going to have a very, very important role. One of the things when talking about renewable energy, you'll hear the term grid parity a lot. And that comes up in relation to traditional energy. Talking about grid parity is when the cost of a kilowatt of renewable energy is the same as the cost of a traditional source of energy like coal or oil. Varies greatly in each region and market, and it's really important to understand that in the context of the cost of renewable energy, which we'll talk about more later on. And when we're talking about installing or using renewable energy on site, it's really important to think about energy performance of those buildings, because without the efficient use of lighting and equipment and well-insulated buildings, the energy that we generate both from renewable sources and from traditional sources would be wasted. So that's really important in context, again, to think about renewable energy holistically. So with that in mind, I wanted to kick off really with a model client approach, because ideally what we see and every property owner take a similar sort of approach, and you see the sort of pyramid form here, starting at the bottom with the basic service being looking at energy efficiency products from lighting upgrades to mechanical equipment efficiency, taking that one step further and making sure that the systems that they're using for that building or on site are low carbon sources, like combined heat and power, or perhaps using tapping into district heating and cooling schemes. And then that's when we start to look at renewables to either complement those low carbon energy solutions or perhaps replace them completely and use that renewable energy source. Either way, kind of on top, where you look at purchasing green energy or offsetting if you don't have the capacity to install energy on site, perhaps in a heavily urbanized area. So looking at kind of increasing the percentage of renewables, but looking at the energy efficiency is the sort of dual strategy that this client is And I think across the top, you see grow the business but reduce the carbon is what their goal is. One doesn't necessarily have to be without the other. Renewable energy, it's perhaps easiest to start talking about the different technologies that are out there. In talking about renewables, there's a lot of talk about solar, because solar is sort of the plug-and-play technology. Everybody knows it. You see on rooftops around the world, whether they're on houses or commercial buildings. Wind is the other easily recognizable technology. You see them in builds around the world. As you fly into certain countries, you can see the offshore wind farms spring everywhere. The bottom three technologies there are a little on the background, let's say. Ground source heat pumps or geothermal technologies provide free heating and cooling. The least intrusive technology. You really don't see them in a building. You wouldn't know that they're there necessarily. Biomass technology, I like to kind of explain, is commercial-grade wood stoves, wood-burning stoves. Aerobic digestion is really looking at kind of commercial-scale compost. It provides a gas product at the back of that that is, again, renewable from that waste, whether it's agricultural waste or products from farming, etc. There's different sources of that. And typically, three across the top, wind, solar, and thermal provide electricity or hot water. Bottom technologies, source heat pumps and biomass, tend to provide heating and cooling solutions. And aerobic digestion is typically used, the gas is pulled off to fire a heat source or it's often pushed into the grid. Look at the renewable energy market. Drivers of that market is talking about this today. This list here, kind of on the left and right of the in the middle, you'll see they're both drivers, but they're also constraints. So looking at for regulation requires often a certain percentage of renewables for new buildings, particularly in Europe. We have the 2020 targets to hit 20% renewables by 2020. It's driving a lot of renewable installations. A lot of local planning councils and cities require their own targets to hit and their own percentage of renewables to be installed on site for new buildings. The other, but also the constraint sometimes to projects, is the subsidies and resource availability. It really determines what type of technology you could or would apply to a particular site. And on the right, without investor or corporate appetite to consider renewable energy projects, there would be a market at all. Each of those kind of play into how we look at, analyze, and choose the best technology for sites. All of these things are a consideration that go into play of the renewable energy market. The big drivers is really the subsidies and incentives for renewable energy. I mentioned grid parity. Until we reach that grid parity, we have to have subsidies for renewable energy to work financially for most clients. The investment, though, that there is in renewable technologies, then rapidly those markets will embrace it. The quicker they embrace it, the cheaper the technologies will come, the installation will become cheaper, and we will reach that grid parity. Then we won't require the subsidies for these technologies any longer. This map gives you a view kind of across the globe of what technologies and incentives there are. Now, the tariff market is really changed a lot, and there are two types of incentives generally that we talk about with renewable energy. And they're either renewable energy certificates, which are typically a cost per megawatt for renewable energy produced, and they'll be treated, bought, or sold. And typically, those get applied to large-scale or utility-scale projects. It's often included in part of the financing mechanism for those projects. Obviously, fee tariffs, or FITs, as they're often called, are per kilowatt of electricity or heat equivalent produced by the renewable energy system. And those usually get exported to the grid or used on site. And because they're kilowatts instead of megawatts, they tend to be applied to smaller projects or on-site renewable energy solutions. And that's generally what we're looking at here on this chart. We're looking at feed-in tariffs. And again, kind of broad brush across the world, how they're approached. The U.S. has a handful of feed tariffs in different states. It varies pretty widely. Then to tax incentives to drive the financials for renewables in the U.S. typically. In the there's been solar and wind tariffs, and we have the geothermal and biomass tariffs coming online, as well as biogas. You see the sort of color coding there. There have been a lot of changes in the solar market in the UK, so that's why that's kind of been branded red. It's been quite an unstable market, unfortunately. Kind of across CE, Russia, Japan, China, India, all those markets have new incentives coming in, either in the form of feed-in tariffs or tax incentives. Again, their markets and the technologies vary greatly as to how mature they are. Across France, Germany, Czech Republic, Spain, Italy, each of these countries have had tariffs to varying degrees of successes and varying degrees of stability. Germany has really been the sort of shining example on how to run a feed-in tariff, and they have already reached grid parity in certain parts of southern Germany. So it costs just as much to and use the energy from solar panels as it does to buy energy from the grid from, say, coal, nuclear, or waste systems. So, there's lots of changes that are happening all the time with this. I've been in this role for a year now, and I often say it's like working in dog years, because 2 months is like the equivalent of 7 years in the rest of real estate. The market really changes that fast. And why, again, especially around solar, there's been so much production coming out of China that the prices have dropped on solar panels rather substantially. And that's making a lot of the countries who have austerity budgets in place to take a second look at the tariffs that they have proposed and begun to implement in some cases, and backing away from that. And in the UK, again, kind of making quick changes to the tariff, chop changes really. If you give me 1 second, I'm having a small computer problem here. The next thing that I want to take a look at is just project examples. So it would be interesting to just share what some of our clients are doing in their approach to renewable energy and sustainability as a whole. See that you're looking at everything from managing energy efficiency projects to project managing on-site renewable installations to securing the and project financing for on-site renewables, but also for utility-scale projects. And again, doing just some functional analysis on helping clients determine what are the best technologies for the markets that they're operating in. And again, looking at this both on kind of a local level, but also a global level for some of our clients, and kind of everything from wind to geothermal and biomass projects, but lots of solar PV, again, because it's kind of a plug-and-play installation that can be installed anywhere. Energy procurement is the next step really in thinking about the market of renewables. How do we go about applying these? And in this graph here, there's three boxes that kind of take you from the maturity and sophistication of the technology and the installation of it to how easy it is to apply that. And the easiest route and the most typical route has been looking at green power procurement. And there's two things really goes with that. Well, that's a great approach for a lot of clients who have aggressive corporate social responsibility targets and requirements and are making public statements about renewable energy and their carbon footprint. Saying green tags or renewable energy certificates are not attributable to specific sites, and therefore they can't say that they're using the renewable energy. They can say that they're purchasing renewable energy, but unless they can tie that to a specific site, they can claim the benefits of that technology for themselves. So that's when you kind of move to perhaps to the center or to the right box, and looking at perhaps an integrated investment where they would either purchase power directly, perhaps from a wind farm, or they would invest in that wind farm directly. Again, can look at an offtake agreement for investing in that, a partial investment in that, wholly owning the wind farm, and just use that offsite energy as part of carbon offset. The last column on the right is looking at owning a renewable energy asset, for instance, solar panels on your rooftop, using that energy site directly or generating it on site for use by the grid. And depending on what your corporate strategy is, it depends on how you approach the process and what you're trying to achieve, and understanding that is really important from an advisor side to try and provide best recommendation of options for you. The other one would be interesting to show was from the graph from the Global Corporate Renewable Energy Index that Bloomberg Investus put a few months ago, and it's the different technology and sectors. And I think what's interesting to see is clients don't really know where their energy sources are coming from, so they have quite the big box there with other or unknown. But technology companies are kind of quite savvy about that and know exactly where their sources of renewable energy are coming from, and using the most directly attributable sources of renewable energy. So, depending on what business you're in or what kind of, company you work for, you can get a feel for what your peers are doing with this side and what industry you're in. More procurement strategies. Again, talking about using off-site or utility-scale projects or on-site solutions. Obviously, quite different approaches, and there's different things to think about. And I wanted to point out what some of those things were. Looking at obviously looking at some of these large-scale projects, wind farms, sometimes they're years in the planning process to get that approved. So, that is quite a long-term strategy. Again, thinking about technology mix, looking at the different projects, one-off or portfolio, and you said about attributable quality. How do you wield the power from that project? Or can you arrange a net metering agreement? What are your investment criteria? Revenue, project ownership, et cetera. And just some ideas of what sort of utility scale projects would look like across multiple sites, concentrated solar thermal, on-site but large scale, multiple biomass plants, looking at onshore wind farms, looking at fuel cells or cogeneration projects using biogas, geothermal projects. There's a lot of options out there to consider, and what your requirements are. Looking at renewable energy models is also different, and there's something out there, whether you're an owner-occupier, there is opportunities for everyone. So this really, I think, where the challenges come into applying renewable energy often, because you have so many different models out there. A landlord or owner who will invest equity and directly get the financial benefits of a renewable energy system, let's say solar panels on a roof, and apply that energy to the tenants at a discounted rate. Again, particularly on solar, there have been a lot of third-party rental offers where a company will say, we will pay you $30,000 a year to put megawatt worth of solar panels on your rooftop, and you additional income stream from unused space, but they take all the risk. They own the equipment, and you as a client simply get the rent. Are looking at JV approaches, joint ventures with renewable energy companies. So they split the cost of the capital expenditure, again, let's say, of those solar panels, and therefore also split the profits, typically from the feed-in tariff or from selling that energy back to the grid. And that can either be kind of split with the landlord or the occupier as well, depending how you want to structure that. We're also seeing a lot more instances where tenants themselves who have long-term leases are actually financing and owning renewable energy schemes, getting their landlord's permission to take the revenue from the FITs and the electricity generated. So just because you don't necessarily own the building and you may just lease space, there's a growing appetite from landlords to allow that sort of arrangement to happen. Even some cases where the agreement for the equipment for solar panels, for instance, if you've got a 15 or 20-year lease, but solar panels are good for 20 or 25 years with fee tariffs, the landlords may still be interested in signing up to that deal, hoping either that they'll get the tenant to renew their lease or so. That is it for me. In summary, just looking at what those opportunities and challenges for renewable energy is, looking at sort of source of income, things on electricity bills, protection of future supply, enhancing green credentials, and again, kind of approaching all of that from a future standpoint that energy costs are going to rise. And again, we've talked a little bit about what those challenges are with lease structures and ownership. So that's from me. Thank you very much.
That's great. Thanks a lot for that, Erin. Really good insight into some of the opportunities out there. We've got a few questions coming in now, so we'll spend 10 minutes getting through as many of those as we can. I think one to maybe start off with. There's one here. They're asking, what's the investor appetite like for these type of project? I guess they're talking sort of third-party investors, but are they interested in the sort of large-scale installations, or are you finding that they're willing to consider building integrated projects? Are they favouring certain technologies? And there's also kind of a sort of subsidiary question to this as well. Obviously, you've kind of had some involvement in energy efficiency schemes. Do you find that investors are also willing to invest in energy efficiency schemes on a building-by-building basis?
I think there's answers to that question depending on what market you're in. I think markets, particularly where there's a strong tariff, investor appetite is quite good. I think, for instance, in the UK market, you'll find that because of the chop and changes with the feed-in tariff, there was a year ago quite a strong appetite from investors and company developers offering, let's say, third-party rental deals for equipment. Much of that has dried up now because the changes to the tariffs have just not made it possible for those developers and investors to returns that they're thinking they were able to. The new government announcement is saying that a 5% IR is appropriate, and for most large investors, it's not attractive enough. So depending on the market, again, you'll on that answer.
Right, thanks, Erin. I mean, there's been a lot in the news recently about feed-in tariffs in the UK. We've got a question here. Are there any measures you can put in place to mitigate your risk?
Mitigate risk of...
Yeah, so I think maybe what they're getting at is obviously the drop in feed-in tariffs kind of changes the business plan quite drastically for some companies. There are additional measures which you might be able to incorporate in your business plan to kind of maybe reduce that exposure to risk.
I think we were one of the many companies and teams that were affected by the recent changes in the UK. They were unexpected, and we have a project that's currently on hold in Surrey. We were going to do 9 sites of solar panels of 50 watts each, and just said, well, we just don't know what's going to happen. We're willing to invest our own money, but right, we don't know that we can get that installed before the December 12th deadline. That change, that reduction in revenue is not going to make the investment worth it for us, which is quite a shame. But mitigating that risk really, I think, comes down to setting expectations with whoever's on business plans to say, look, the sooner we act, the sooner we secure this, the sooner we get this installed, there it is. There's been a lot of questions, in the last year from clients saying, well, shouldn't we wait for the next round of better technology or, see if we can efficiency, make more money out of it. And all the clients have lost out because they wanted to wait, and the tariff has dropped, and we're seeing that in the UK, in Germany, in Italy. So yeah, indecision and expectations seemed up in laws all around. So that's probably best advice.
Great, thanks, Erin. Another question here is, do firms include marketing and PR costs and benefits into their renewable energy strategy? How are these qualitative criteria being judged?
I'll say that yeah and no is probably the answer to that. A lot of firms are considering renewable energy because of the marketing benefits of that. That would be to say that we're doing something good and sustainable and green, and that ties in with our corporate social responsibility. The reports that we publish, the annual reports. So I think some of these perhaps more mature and more focused on sustainability as a whole are operating that. But I think a lot of companies to that area just begin to think about it. So there's definitely still opportunity around that approach.
Great. This is a slightly sort of related question as well. I mean, are you finding that CSR is having a growing impact on driving forward these type of technologies? I mean, do you see it making a big difference?
It's making a difference with certain types, but not all. We have Coca-Cola down as one of our clients projects that we're looking at for them. And Coca-Cola is a global brand, places a fair amount of on sustainability, and they aggressive and public our targets. So the clients that take that quite seriously and is looking at renewables as part of that. But other corporate financial institutions and things that more from a financial perspective than a CSR perspective.
Erin, I'm conscious of time, but I think we've got time for just a couple more questions. I would highlight any of the pitfalls of renting out your roof to a third-party developer for solar PV. Are there any sort that spring to mind?
There's definitely several to consider. The first is quality of the company that is putting those panels on the roof. One of the things, we've been approached, lots of questions, lots of clients coming to us and saying, hey, we've got this great offer for lots of money to rent our rooftop. And we take a look at them and say, never heard of them. Run a Dun & Bradstreet report on them, and they've not really been around for that long. And considering they're signing you up to a 25-year deal, you want to be wary of who those companies are. And that's one of the things that we've really interesting in the UK in particular. You've really seen how rapidly that market has changed, and most of those offers have dried up. Those companies are in business that were 6 months ago making offers for fantastic rents. They just don't exist now. So that's the biggest worry, is who are the companies that are saying they're going to maintain these panels for the next 25 years on your roof.
Great, thank you for that. Just one final question. Are you finding wider carbon savings such as the EU ETS scheme, the CRC scheme, are offering additional attractiveness for anyone investing?
Unfortunately, no. The answer is no. Those schemes are not drawing discussion for renewable energy at all. And I think it's sort of planned on the government's parts that they're not more holistically looked at and complement one another in a better way. So that's quite unfortunate in Europe.
Okay, well that's great. Thanks a lot, Erin. I'd like you for your time today, and also for everybody who's joined us and for the questions that they've sent in. A recording of the webinar and the presentation slides will be archived on the 2 Degrees platform. And for those questions we didn't get time to answer, we'll post up in our forum for further discussion. We all found today informative and useful, and that you'll be able to join us for another webinar soon. So thank you.